Hello students, this is your Mr. GST who actually makes GST good and simple tax for you. And with the response you have given for that 35 case study MCQs booklet quickly revised in 1.5 hours, I got motivation to do more such videos. So in this video quickly we are going to 100% cover all the key adjustments, everything in mock test paper 1 of May 2025 exams. And please make sure when you are going through this video, wherever you like this, all that the concept etc, do like the video so that it will reach even more students and it will be helpful for them, right? So let us get into the discussion of MTP1. So yes students, coming to this mock test paper 1, 19th March 1, I am not recording this on 19th March, don't worry. So now first straight away going with MCQs 30 marks. See, in first case scenario what they have done is, in first case scenario they are telling to us PQR Private Limited, registered, important in Uttar Pradesh. Manufacturers is very important, because in this question this is related to composition scheme. So identifying any question when you are solving, please understand identifying who is the person, from which state he is registered and what he will be doing. That is really some fundamental thing. Now, sir, he is manufacturing the products. They gave you information regarding financial year 1 and 2 and also 3 in the upcoming paragraphs. Here the interesting point is, they told this fellow is dealing with goods and services and also he got some interest income in financial year 1 and 2. And please understand, the question is about composition scheme. In financial year 3, whether he can go for composition scheme or not, that purely depends upon the preceding financial year aggregate turnover. And when you are calculating aggregate turnover, you take this supply of goods also, supply of service also, but you should ignore this interest income that you remember. That means in financial year 3, if he is going for composition scheme, he should be providing, he can provide services, but services only worth 10% of the turnover, aggregate turnover in the preceding financial year, actually in the preceding financial year. So, or 5 lakh, whichever is earlier. So, this is coming somewhere around 1 crore 11 lakh 25,000. Out of that, he should be providing 10%. That means 11 lakh 12,500 he should be providing the services. But this interest income for all calculations in section 10 composition scheme, you will be ignoring, that you should remember. And there is one more adjustment, as I told you already in this 35 MCQs quick revision video. See, whenever they have given something like not exercise the option to pay tax itself, GTA, that means GTA is not going for FCM, they are going for RCM. And of course there is one more hint here, tax rate is 5% in the question, so nothing to worry. Now in the information, see, in the financial year, third financial year, yes, the company has taken composition scheme and they have given details of April to June quarter. And what are the details they give for April to June quarter? And in the upcoming question like MCQs, they have asked you their tax liability also. See, whenever the question is given, you should clearly segregate the information regarding sales and purchase. I'm sorry. So segregate the sales and purchase, okay? And please understand, here they have clearly segregated sales and purchase, three points, all that. And because this fellow is opting for composition scheme for April to June quarter, what is the tax liability will they will ask? And in the tax liability, when your calculation, 1% you have to pay, correct? 1% of the turnover, whatever you do, on that you have to pay. So goods also 1%, services also you should pay 1% only, that is sufficient. So both goods and services, you have made a turnover of 11 lakh, somewhere 11 lakh 12,000 something, okay, 500 something. So that way here on that 1% you should pay, that means 11,125.5, you should round off it to 11,126. And they will also ask you total. See, understand, here the question is, what is the total GST liability? When they ask you what is the total GST liability, you should also talk about both composition liability as well as RCM liability, okay, for April to June. So there is total composition liability is 11,120, and transportation services we have seen, no, like GTA services 50,000 is there. So for that 5% RCM, so 2,500, total 13,626 will be the answer, okay? So please be careful with this wordings, total GST liability. Next, and see here interest income revenue is also there, but interest income revenue, sir, it is however exempt under GST, we will not pay GST on that. And anything for the purpose of section 10, actually, for the purpose of section 10, any calculation, you should ignore this interest income, that you are clear, okay? Next, whatever the materials they have purchased from other states, services they have received from other states, or whatever it is not relevant information. Now most of the cases they are commonly asking this particular point, actually be careful there. See, there are two supplies actually. I am selling goods to you, you are supplying it to your friend, but you are asking, Vishnu sir, you directly transport this goods to my friend. So bill to ship to model, I am billing to you, shipping to your friend, but you are directly billing to your friend and shipping to your friend, correct? There are two supplies happening here. So there are two supplies, so two place of supplies will come into picture. For one case you should take bill to ship to model, the other case movement of goods is involved, so final destination of the goods will be the place of supply. So that way you be careful. And next, there is a charitable trust with respect to 12AB, registered under 12AB, providing services regarding yoga and spirituality. There is nothing but specified charitable activity, Sir, just because you're a charitable institution, it is not exempt under GST. Only specified charitable activities are exempt. Like, for example, they are thinking about granting the rights for advertisement in the premises. That is not specified charitable activity, so that is taxable under GST. Okay. So these are the key points in this case study, case scenario number 1. Okay, and one more thing, very important thing, guys. Here there is something called which of the following statements are incorrect. See, in tension, like when I was recording, when I tried to record this quickly, what happened, I read this as correct and then did the recording. Please understand, it is incorrect actually. So even when you are solving the question paper in the exam hall, you will be having so much of tension, you will read something differently. So be very careful with this true or false statements, correct or incorrect, these things. Please be really careful. Okay, so that is the point there. So regarding that, we have discussed everything. Now coming to case scenario number 2. Case scenario number 2, the 35 case studies in 1.5 hours I posted a video, no? So in that, exactly what is there, 35 case studies uh, released, the booklet released by CA, same case study here. So this we have already discussed there. If you want, you can just check that video, 1.5 hour. We have completely revised all 35 case studies with good 100 plus adjustments. Definitely will be useful for your revision. Case scenario 3 is also same like that, 35 case studies out of that one case scenario here again. But I just want to stress on a point, section 14 applicable for goods as well as services, that is change in rate of tax, the time of supply. See, again I am teaching you here, when there is change in rate of tax, imagine change of rate in tax is happening on 10th Jan as per the question given here. You record 3 dates: when the supply has happened, when the date of invoice is there, when the date of payment is there. 3 dates you have to record. Check which is happening before the change, which is happening after the change. Supply is happening before the change, invoice is also before the change, payment is after the change. See, where supply is there, supply will never become time of supply. So the date of supply will never become time of supply. Sir, when supply happened before, along with that anybody is there, that will be the time of supply. So this will be the time of supply. Sir, along with that, if date of payment was there, date of payment will be time of supply. Sir, along with that, nothing is there, that means both have happened after the change, then whichever is earlier you have to take. Sir, both happened before, now both happened before, now all the three happened before, section 14 itself will not come into picture. Okay, now this is with respect to time of supply. Now when you see the rate of tax, old rate or new rate, out of these three events, where two events are located, two events are located before change, so that means old rate. Two events are happening after the change, that means new rate. So please be careful here. Now what will happen, old rate will come into picture, simple. Okay, next. One more interesting point I just wanted to discuss here is, see, whenever you read regarding renting of properties, for that they have asked here, what is the time limit to raise invoice? Generally, renting of property means, sir, it is nothing but service. So within 30 days, we will raise the invoice. Like that, it will come to your mind. But renting of property is a continuous supply of service. So the time limit to raise invoice will be what? You should see whether the due date is ascertainable, not ascertainable, or the payment is linked to completion of an event. Due date is ascertainable on the due date, on or before the due date. Not ascertainable, on or before the date of payment. Payment is linked to completion of an event, on or before completion of such event will be the time limit to raise invoice. So please be careful here. Okay, so these are the points with respect to these case studies. And there are independent MCQs also. Independent MCQs both are regarding customs duty. So they are saying, sir, for determining CAF value, if cost of insurance is not given, not ascertainable, then what do? We take 1.125% of the FOB value. Sir, we don't have FOB value also, we have the information combined together, FOB, transportation, etc., various things and all. Then what should we do, sir? In such case, whatever the lump sum figure available, on that 1.125% will be charged as cost of insurance. So these 2 points are saying the same thing. So if FOB is ascertainable, 1.25% on that. If not ascertainable, but sum of FOB, transport, loading, unloading, all are available, 1.125% on the such sum. So what is the most appropriate option here for this? C, where second option, third option, both are possible for ascertaining cost of insurance. Okay, that is what the concept of 14th MCQ. 15th one. See, when you are reading this customs duties, actually when their duties are to be paid, they are asking what are the total duties payable under customs law. So all this basic customs duty, social welfare surcharge, IGST, everything, all these things will come into picture. Safeguard, anti-dumping duty, protective duties, everything. But here in the question, they told clearly, ignore integrated tax and agricultural infrastructure and development cess. So no need to calculate IGST, all these things. So simple question, importation, the assessable value is 50 lakhs, basic customs duty 10% on that, 5 lakhs, social welfare surcharge, 10% on basic customs duty, that also charged. Safeguard duty is always charged on assessable value, so 30% on that. So total amount is nothing but what? 20 lakh 50,000. This is the MCQ part. That means we are done with the 30 marks discussion. 30 marks discussion hardly in 10 minutes. Okay, not even 10 minutes. Right. Now let us move on to the balanced descriptive question. Balanced descriptive question, if you see the first question. So the first question here, the interesting information what we have to identify is this fellow is a retail trader and is dealing with both taxable goods and exempted goods and Rajasthan. Why you have to identify this now? Because this question is regarding common credit, all that. That means taxable, exempt, all these nonsense are there, commonly used everything. So when he is a retailer, he buys taxable goods, purchases are taxable, now then automatically sale will be taxable. Purchases are exempt, now automatically sale is also exempt. This you have to remember because he is a retailer. Okay, right. Now coming to the point, they gave the sales information, taxable and exempt. Taxable on that GST will come 10 lakhs is the sale, and exempt one no GST will come, right? And purchases they give. Taxable goods they have purchased, obviously they can take ITC. Exempt goods they have purchased, no ITC. And balance anything, any expense incurred here will be see shop rent is a common credit, telephone expenses, audit fees to chartered accountant, all these things are nothing but common credit, both used for taxable as well as exempt purpose. And here they said 20,000 worth mobile phone bills are paid, which are used by employees, and they have used it for official purpose. So it is a business purpose. So you can take ITC. But the point is, it is used for common purpose. We have to see how much has to be reversed. And as already we have seen in 35 MCQs quick revision, company policy, internal policy, integral policy, integrity policy, all these things are not required. Statutory obligation, why you are paying insurance on the employees, health insurance or life insurance, that is as a statutory obligation, now you can take ITC. But this is not a statutory obligation, sir. This is a company policy. Credit is blocked. Sorry. Right. Now, one very important point which I have to discuss with you. See, transportation. Sir, we are taking GTA services. When we are taking GTA services, we know it is RCM. Sir, when we are taking GTA services for transporting taxable goods, for transporting exempt goods, in both the cases, please understand, whether you transport taxable goods, whether you transport exempt goods, both the cases, GTA services only you are taking, it is taxable only, taxable under RCM. So, even if you transport taxable goods or exempt goods, you have to pay GST under RCM. But if you are transporting exempt goods, one interesting point is you have to pay GST under RCM for sure, but you cannot take ITC of that. So I repeat, if you are transporting taxable goods, GTA services, RCM will come into picture, and that amount you can happily take ITC also. But sir, if you are transporting exempt goods, GTA services, RCM liability will come into picture, but on that amount you cannot take ITC. That please keep in mind. Okay, so two things are there here. Okay, both the cases. One case RCM you pay, no ITC. The other case RCM you pay, but you take ITC. That is what I have written here. For 50,000 you pay under RCM but no ITC. But 1,50,000 is for transporting taxable goods. ITC is also there, RCM liability is also there, both there. And whatever the goods not included in the taxable goods, not included in taxable goods value of 45 lakhs before, so purchases will not get affected. That entire ITC you can take. So these goods given as free samples, so when they have purchased, no ITC, so nothing, so no tax implication on this. And the important thing is, sir, all the amounts are given here are nothing but exclusive of taxes, sir. So please do calculations accordingly. And another important thing is, inward and outward supplies are received from or to registered person. That means all the cases, your customers and your suppliers all are registered. Because of this, one interesting point which we can identify is the rent paid to the shop will not suffer RCM. Okay, because commercial property rented by unregistered person, RCM will come. No, here because supplier is registered fellow, no RCM on the rent paid for the shop. And everything is happening within Rajasthan. So in your calculations, only CGST, SGST will be there. IGST will not be there in your solution. And they gave RCM rates 2.5%, 2.5%. Normal GST rate 6%, 6%. So IGST rates you need not worry. Sir, opening balance, no opening balance, or cash ledger or credit ledger, no opening balance at all. You should calculate ITC credited to e-credit ledger, common credit, ITC attributable towards exempt supplies out of common credit. That means how much is the reversal amount we should calculate, and net GST payable. That means you should set off ITC all the stuff and determine what is the tax payable in cash. Okay, now coming to the point. See, when you are calculating common credit, all that reversal, I will just tell you one small method to solve it. See, first what you take is, you first take total GST paid on purchases. This you can use for rule 40 to 43 also. From that you remember the word pub. So pub spelling is not PUB, it is PEB. Let us remember that way. So whatever the total GST paid on purchases, you take that amount. From that, remove whatever is belonging to exclusively personal, exempt, and blocked credits. So PEB. So whatever you purchase for personal, you cannot take ITC. Exclusively exempt, you cannot take ITC. Blocked credits, you cannot take ITC. So the balance amount only you can take to ITC, so that only will be credited to e-credit ledger. From that, if you remove the amount of reversal as per rule 42 or 43, then you will get the amount what is actually ITC available for me. Okay, so how do we calculate this reversal of ITC? See, whatever the amount has been credited to e-credit ledger, from that exclusively whatever is belonging to taxable thing, if you remove, automatically what will happen? So automatically balance everything is nothing but common credit. From that, proportionately towards exempt turnover. So common credit into exempt turnover by total turnover you take away. In simple words, I'm teaching you. So then what will happen? That much amount you are supposed to reverse it. Okay, so simple. That is what the concept. So using that, I'll just show you the answer itself straight away. See in the answer, as we have seen, whatever the purchases are there. So taxable goods purchases, we can take ITC. Yes, this much. On exempt goods, whatever you have purchased, no GST only. So shop rent, telephone expenses, chartered accountant fees, all these things, yes, you can take ITC. These are rated to e-credit ledger. But premium paid on health insurance, not a statutory obligation, no ITC, block the credit, will not come. So next, uh, goods which are purchased and disposed as free samples 5000, on that also block the grade 17 subsection 5, ITC will not come. So that one, and on RCM purchase also you can take ITC. RCM purchase GTA services are there, no, for two GTA services, one you can take ITC, one you cannot take ITC, correct? So for one thing we are not taking ITC, for the other thing RCM purchases you can take ITC. So this much amount totally will be credited to e-credit ledger. This much amount will be totally credited to e-credit ledger. As I told you, from that what we should do, we should remove the reversal amount. How do we remove the reversal amount? Sir, this amount whatever is credited to e-credit ledger, from that whatever belonging to exclusively taxable, if you remove, sir, whatever is belonging to exclusively taxable, this goods whatever you purchased are taxable goods, to sell taxable goods exclusively belonging to taxable, and transportation of taxable goods, this is also exclusively related to taxable activity. If you remove those two activities, the total amount credited to e-credit ledger minus ITC on taxable goods minus GTA services which are for taxable goods, if you remove those things, automatically balance is nothing but the common credit. From that what we should do, into exempt turnover divided by total turnover. Exempt sales is 10 lakhs, taxable sales is 50 lakhs, that means 10 divided by 60 if you put, automatically you will get the reversal amount. So 27,600 into 10 lakh divided by 60 lakhs if you put, you will get 4,600 reversal. So out of the amount credited to e-credit ledger, if you minus 4,600, this is the amount available as ITC. This is the amount available as ITC. Hope it is clear for you. Now what we will do, we will take that and we'll go and set off the tax liability. We know only taxable sales are 50 lakhs. So 3 lakhs will be the GST liability. From that ITC if you minus, this is the net GST payable. Okay. But sir, we have also RCM liability. RCM liability, two RCM liabilities. Transportation of taxable goods, transportation of exempt goods. Both the cases, RCM liability will come into picture. But you can take ITC only for transportation of taxable goods. That's the different story. But RCM liability will come for both the cases. So that if you add, this will be the net GST payable in cash for that particular tax period. See, with this we have finished even first question, 14 mark question discussion also. Now let us move on to question number 2. So now the second question, if you see, this is all about a company is importing some machinery or something, whatever it is, a machine only in USA. They are appointing a clearing and forwarding agent who has to clear their goods from the port and hand it over to the company. Now here one interesting point is the logistics fellow, Shiva Logistics. Sir, they can incur on the behalf of this company expenses in relation to clearance of the imported machine from the custom station and bringing the same to the warehouse of Malsato Manufacturers Limited. That will be reimbursed by the company on actual basis. Now these are the interesting words here. Whatever the expenses relating to clearing the goods and bringing it the same to warehouse, all that can be borne by the agent only, and for that whatever the expenses are there he can incur on his own and that will be reimbursed by the company on actual basis. Now Shiva Logistics, the agent who is clearing that machine, is providing the following invoice to the manufacturers. Okay, this is the invoice. For his agency services, the charges 5 lakhs, unloading of the machine 50,000, charges for transporting of the machine from the port to Shiva Logistics godown 25,000, and charges for transporting the machine from Shiva Logistics Ahmedabad go down to the warehouse of the Malsito import house. So transportation again, prepaid and submitted bill of entry and paid customs duty. Okay, dog dues paid. Dog dues is also regarding this port area, port charges paid, all this stuff. Okay, total expenses, traveling expenses, telephone expenses. If you see now, what is the value of supply for the services provided by Shiva Logistics with the help of the information above? Will your answer be different if Shiva Logistics has charged straight away flat 13 lakhs as a lump sum consideration for clearing that machine? Now please understand, here, pure agent concept, if you remember, sir, pure agent is a person who is authorized with a contractual agreement with the recipient that supplier will incur the expenses, whatever has to be done, and he will recover only on the actual basis, and he will not intend anything like intend to hold any title over the goods or services, and he will not use it for his personal purpose. So, such cases, this pure agent definition is satisfied. Now, pure agent services, whatever the expenses is incurring as a pure agent, that will not be added to the value of supply. So, and one important thing is this fellow is authorized to incur the expenses to bring the machine till the godown of the company, correct? So, if you see these expenses, sorry, if you see these expense, this, these expenses are incurred as a pure agent. So it will not be added in the value of supply, and 5 lakh is his service charges for that hotel expenses, traveling expenses, telephone expenses, whatever he has incurred, he has not incurred them as a pure agent. Okay, so the value of supply will be 5 lakh plus 45,000, 50,000, 5 lakh 95,000 and 5 lakh 97,000. I guess correct my addition. 95, 97. So 5 lakh 97,000 will be the value of supply. Okay, and they have also asked the question, sir, what if he is charging a flat 13 lakhs amount? If he is charging flat 13 lakhs amount, then automatically the value of supply will be that 13 lakhs only, the transaction value. That is what the concept. Okay, right. Regarding that, is the adjustment. Next, coming to the next one, in the same question only, 5-mark question, customs duty calculation. See, somebody is importing some machine. Okay, and the FOB value has been determined as 20,000 US dollars, including the design and development charges that is imported by the officer, and it was accepted by the person importer also. The trust one charitable institution is importing, so they also accepted that. Now they have given other details. Freight paid by air. Please understand, if freight is paid by air, you know it is 20% of FOB should be restricted, correct? That you be clear. Next, design and development charges 2,500. Already that is given here, so again we will not take it, so ignore this one. Next, commission payable to an agent in India. See, normally commission expenses, buying except buying commission, everything can be added to the value of supply. So here, everything can be added to the assessable value. Okay, so here, commission payable to an agent in India, they did not mention buying commission, so let us take it as not a buying commission. So we will add it. This 12,500 in rupees, that is important. These things are in dollars. Okay, 20,000 is dollars. Now they have given exchange rate by CBAC and rate of basic duty also. Now please understand, coming to exchange rate and basic customs duty rate. Sir, exchange rate when we will take? Sir, exchange rate we will take on the date of filing the bill of entry. But basic customs duty rate we will take date of filing of bill of entry or date of arrival. Okay, whichever is later we will take. So here date of bill of entry is 8th September and arrival is on 30th September. So on that time, like 10% is the basic customs duty rate. So we'll take 70 rupees and 10% as the calculation figures. So if you see 20,000 US dollars, I'll just show you the solution straight away so that it will be easy for us. We can save some time. So 20,000 US dollars, will convert it at the rate which is there on the date of filing bill of entry. So 70 rupees that will convert, and FOB value computed as per that is what 14 lakhs, and commission is also to be added because commission is already given in rupees. First let us convert everything into rupees and add that in the rupees. So FOB value as per customs is this one. Okay, 14 lakh 12,500. Air freight, you know 20% is the maximum. So 14 lakh 12,500 into 20%, 2 lakh 82,500 you should take. But actuals is different, something higher than that, so don't consider that. Insurance, they did not mention anything in the question, so we have FOB value 1.125% of the FOB value will be taken as freight. Okay, so we have got the cost, insurance and freight. So here, sorry, insurance and freight, sorry. So 1.125% is the insurance, not freight, sorry. So CIF value you have got it. Okay, CIF value is 17 lakh 10,890.63 rupees. That itself will be taken as assessable value. Okay, right. So that is what the second question. Now let us move on to third question. The third question is very easy one. First part, first part here, first sub question A. So this is regarding ITC, I guess. ITC available, all the stuff. Compute the amount of net ITC that can be availed. Okay. Now please understand, they have given various purchases. Again, life insurance premium policy of the company taken on the employees in the name of employees, because it is company's internal policy that we don't care. So it is automatically blocked. Next, raw materials purchased invoice is missing, blocked. Used for zero rated supply. Used for zero rated supply. Yes, obviously you can take ITC. Purchases used for zero rated supply. One twist here in this question is one interesting point, actually, very important adjustment. See, what they are saying is there's zero rated supplies are no, the zero rated supplies are exempt under GST. Whatever they are saying, all the above inward supplies except serial number 3. Serial number 3 is zero rated supply used for manufacturing taxable goods. Inward supplies at serial number 3, that is for zero rated supplies exports. The goods which have been purchased are used in manufacture of exempt goods. Even though you are manufacturing them in exempt goods, see, because you are exporting it, it is automatically zero rated supply. You can take ITC of that also. So these purchases are used for making exempt goods, but they are not sold in India. They are sold outside India. So that means it is zero rated supply. Hence, you can happily take ITC. So I repeat, exempted goods, but if it is a zero rated supply, exports or sales supplies, you can happily take ITC on that purchases. Next, works contract services debited to P&L, you can take happily ITC on that. Any capital goods on that you are claiming depreciation, GST component also you are claiming depreciation here. Okay, so automatically ITC will not come to you. So those are the things which are required here. And one more thing here, there is like whatever you have purchased in the given purchases, actually they are saying last year September, this is April month discussion we are doing. Actually, this is information related to April of the current financial year. September of the previous financial year, sir, you have sent some, you purchased some raw material, you took ITC 2,40,000 and you have sent it to a job worker. Till date, you have not received those goods. What is the tax treatment for this? See, September when you have purchased them and you have sent it to the job worker, in the September month of the last year itself, you have taken ITC of that. And those inputs after manufacturing everything, that should come back to you within 1 year. Still 1 year is not over. You have sent them September. Now this is still April only. You have time till September, right? So still that 1 year time limit is not over. So no need of any GST payment, all that stuff required. Okay, so that is what the adjustment you have to remember. Okay, so with this, that 5 mark question is over. Next, they've asked you to determine time of supply in the following cases. The simple one, this is like something goods related to RCM 12 subsection 3. You know what is the time of supply as per 12 subsection 3? Date of receipt of goods or date of payment, or 31st day from actual date of invoice, whichever is earlier. Next, goods with respect to vouchers, time of supply of vouchers 12 subsection 4, whether the nature of supply hidden in the voucher is identifiable or not identifiable. Accordingly, you can proceed. Okay, next one, one more 4 mark question in the third question. Third question, sub question C. So this question is all about Balla imports imported certain goods, unloaded in the customs area. Order of clearance is passed on 5th October. And see, this is all about some goods are pilfered when they are in the custody of port trust. When they are in the custody of port trust. Now the department is asking the custodian. Who is the custodian here? Port trust is the custodian. They are asking the custodian to pay customs duty on the pilfered goods, whether their contention is valid or not. And one more thing, the Balla imports has asked port trust to make good the loss of the goods. The goods are lost now, so the importer is asking the custodian to compensate the loss. Now here two things. One is department is asking customs duty from the custodian and the importer is asking compensation from the custodian. Now please understand, custodian is liable to pay customs duty on the goods pilfered during his custody. But this is applicable only for the custodians who has been appointed as a custodian by approval of principal commissioner. But please understand, this Airport Authority of India, Port Trust, Container Corporation, Central Warehouse Corporation, State Warehouse Corporations, these are custodians without even any approval of principal commissioner. That means these people will automatically act as custodians. They need not take any approval from principal commissioner. So for these people, that section 45 doesn't apply, where custodian is liable to pay customs duty on the pilfered goods during the custody. That is only for the custodians who got that custodian status by the approval of principal commissioner. For these people, so no such prior approval is required. So these people will not fall under that section 45. So they are not liable to pay customs duty on the pilfered goods. This is one aspect from the question. The another aspect is, sir, even though they are not liable to pay customs duty on the pilfered goods, they being the bailey, the custodians are being the bailey, Port Trust of India, so they have to compensate the loss incurred for the importer. So that is what actually the answer for this particular question. So with this, we are done with 3 questions. We are left out with 3 more questions. Simple, small questions. Let us see them. The next one, if you see the fourth question, in fourth question, first subpart A, see there is Surajban and Co. registered under GST in Maharashtra. He is making a zero rated supply of goods worth 84 lakh 50,000 without paying tax. Without paying tax, 10 lakh 14,000, and they made a refund application, but that got rejected by the proper officer. Now, what their doubt is, a taxation manager, Mr. Rabai, has sought recrediting the electronic credit ledger as per the provisions of Rule 86 for the above rejection. Examine the scenario and offer your comments. Please understand, whenever you make this refund application from the unutilized balance of e-credit ledger, what you have to do, you should first debit the amount how much you are applying for the refund, and then proceed for the refund application. See, here they have not mentioned whether they have debited the credit ledger or not. If you have debited and then refund application is rejected, then whatever the amount has been debited earlier will be recredited back to the e-credit ledger. But here they did not mention whether these people have debited the e-credit ledger at the time of refund application or not. So if they have debited, then okay, recredit will happen. But nothing is mentioned here. So assuming they have not debited anything from the e-credit ledger, now recrediting of e-credit ledger will not be allowed. That is what the answer. You can just elaborate the two scenarios. The answer they have given only debit is not given, so recrediting will not be possible. You can write down both the possibilities, okay, because they have asked you to offer your comments. Okay, that is what the answer. Next, here another interesting thing, Mr. Narayan have got three consignments, imported some consignments where one is with 200 units, 400 units, 400 units, imported them, total 1000, an article called ZEP, and it has been valued 1150 per unit, customs duty is 250, and his profit he wants 350 rupees, and he will sell it for 1750. What happened after 1 month of selling the entire consignment of that article? He came to know that this 200 units consignment is there. No, this he misunderstood as 400 units. So instead of paying customs duty on 200 units, he has paid on 400 units. Okay, only after making sales he has understood, okay, I have paid customs duty on 400 units even though I have imported only 200. Now he is filing an application for refund for that balance extra 200 units he has paid, no, 250 customs duty, then 50,000. Is the bar of unjust enrichment is attracted, is the point. What is unjust enrichment? You should not like get benefited at the cost of some other person. So here what is happening, see, first of all understand, he is making a refund application. Sir, he has purchased 200 and he has sold 200, but he has paid customs duty on 400. That means extra 200 he paid customs duty, but where are that extra 200 units of goods for selling to others? How can I pass on the burden to somebody? And it is clearly visible when we see, before clearing the goods itself, we have settled the taxes, all that. This fellow has already paid 400 on 400 units, the tax. But while clearing, it is clearly visible on the bill of entry, 200 units only will be present. So there is an evidence for him. And one more interesting thing is, because 200 units he has not at all received, extra 200 units he has not received, he has not sold to anybody. So it is clearly visible he has not passed on the burden to his customers. So here, bar of unjust enrichment will not be coming into picture. Okay, so he will happily take refund amount. So that is what the answer. So you can just go and read the answer for the sentence formation, etc., etc. But this is the status. Next, one more thing is regarding importation and customs duty calculation, all that stuff. So what is the question? Question is regarding, sir, one fellow has imported goods. Into bond bill of entry was presented on 14th May. That means deposited the goods into the warehouse. And deposited them in the warehouse. Assessable value is 1 lakh US dollars. Order permitting the deposit of the goods is for 4 months. So you can store the goods in the warehouse for 4 months. And that was issued on 21st May. So that means you can stay in the warehouse till 21st September. Okay. 21st May means June, July, August, September. Okay. And Vishal deposited the goods in the warehouse on the same day, but did not clear the imported goods even after the period got over 21st September. A notice was issued under section 72 for him, demanding the duty and interest. Demanding the duty and interest. That is important here. Okay. Now, Vishal cleared both the goods on, cleared the goods on 14th October. Compute the amount of duty interest payable by Vishal while removing the goods on the basis of following information. Rate of exchange. Rate of exchange, you know when the rate of exchange will be taken while filing into bond bill of entry. Into bond bill of entry was filed on 14th May. Bill of entry. So, rate of exchange is 65.20. Basic customs duty rate when we have to take? When we have to take, na, see, when the goods are deposited in the warehouse for a permitted period, sir, you have to clear the goods within that permitted period. If you clear that goods within that permitted period, no problem. On that clearance date, whatever is there, that will be taken as rate of basic customs duty. But if you are clearing it after the permitted period, that means the permission is till 21st September, but you are clearing it on 14th October. So if you clear it after the permitted period, it is deemed that you have cleared them on till that permitted date, that is 21st September only, and we will take 21st September as a benchmark on that what is the basic customs duty there that we will take into picture. Okay, so these are the things. Now they have clearly mentioned IGST is exempt, ignore agriculture and infrastructure development cess. So simple here, first of all, we should calculate the tax amount, and next thing we should calculate the interest amount. Tax amount, if you see, I'll just show you the problem itself. So show you the answer itself so that it will be easy for us to discuss also. So assessable value 1 lakh, as I told you, sir, 65.2 is our exchange rate, because exchange rate as on filing date of bill of entry. So into bond bill of entry is filed on that 21st May something. So that one 65 lakh 20,000. Customs duty will be 10% and social welfare surcharge of 10% on basic customs duty. This will be the amount. So this is the total customs duty payable. Basic customs duty plus the social welfare charge surcharge. Now the interesting part is the interest income. Interest will come. See, please understand, when the goods are deposited in the warehouse, and no matter what is the time limit they gave you, you should clear the goods from the warehouse within 90 days. If you are not clearing the goods within 90 days, after the expiry of 90 days, that is from 91st day till the date of clearance, you have to pay interest on that 15% per annum. So if you see, you got the permission on 21st May and deposited the goods on 21st May. So within 90 days from the date of which the order permitting the goods to be warehoused, okay, is made. So 21st May means you should clear that in 90 days, means in May you have 10 more days left, June, July, August, total 60 days. Okay, so 19th August is the deadline by which you should have cleared the goods. But you have cleared the goods when 14th October. 14th October. That means 19th August is the expiry date. Now in August still we are left out with how many days? In August still 12 days are there, 30 days in September, 14 days in October. Total 56 days delay is there, and interest calculation. On the total customs duty payable 7,17,200, 15% for 56 days. Okay, you have to pay the interest. This will be the interest calculation. Hope it is clear for you. Now we are moving into fifth question. See, the fifth question, part A, is you have to check the bailability and quantum of punishment for prosecution. Regarding prosecution, if you see, Amit collected 245 lakhs as tax from clients and deposited 241 lakhs with the central government. It is found that he falsified financial information and not maintained records. Please understand, he has collected 245 and he has deposited only 241. That means 4 lakhs default is there. 4 lakhs default is, see, understand, for this and all you cannot be sent to jail. Okay, you know 2 crores is the limit for the prosecution, the imprisonment. And of course, if it is fake invoices, only 1 crore. Sir, here it is, just remember section 132 subsection 1, prosecution will come only in 4 cases. Remember properly, no invoice, supply made, no invoice, fake invoice, no supply but invoice is given, so fake invoice. Next, third one is you have taken ITC on fake invoice. Fourth one is tax collected but not paid to the government within 3 months from the due date. These are the only 4 cases which will attract imprisonment with the limit of 2 crores, all that stuff, 5 crores, etc. But any other offenses, whatever mentioned here, any offense in section 132, sir, if at all it is repeated without any on monetary limit, repeated offender, straight away imprisonment. So here it is 4 lakhs. Because of that, he'll not go for that. No imprisonment. Of course, no imprisonment means no bailability, nothing will come into picture. Sir, falsified financial records also, sir, not maintain the proper records. If he has done it with an intention to evade taxes, obviously, yes, there is imprisonment up to a period of 6 months. That is maximum 6 months imprisonment is there for falsification of the records. You know that. Next, Suresh is there collecting 550 lakhs from the client but depositing only 30 lakhs. That means 520 lakh amount involved. Tax collected but not paid to the government. Prosecution will come into picture. More than 5 crores means automatically up to 5 years imprisonment will come into picture. Up to 5 years. That means maximum will extend to 5 years, not standard 5 years. What will be the implication with regard to punishment on prosecution of Amit and Suresh? As I already told you, what would be the position if Amit and Suresh are repeated offenders? Like if they are repeating the offenses without any monetary limit, they will be suffering imprisonment. Right, understand. So repeated offenders, yes, they will be subjected to imprisonment, minimum 6 months, maximum 5 years. And understand here, one more important thing is, sir, if it is greater than 5 crores, bail also not possible. So it is a non-bailable offense, cognizable, and like it is non-bailable offenses. The 4 things what I told, no invoice, fake invoice, these are actually non-bailable offenses if it is exceeding 5 crores. No invoice, fake invoice, ITC on fake invoice, and ITC, like, sorry, tax collected but not paid to the government. So please be careful with that. Okay, those all points you should mention in your answer actually, because they ask the question regarding bailability as well as prosecution. Okay, next. What is next one? See, there is an order dated 20th August. The Joint Commissioner confirmed that IGST demand is 280 crores. Company is disputing the entire demand. This is important because if you are disputing only part of the amount, on that only you should make the pre-deposit. Whatever you are agreeing that you should deposit before going for an appeal. This question is regarding appeal. They want to know about the pre-deposit for an appeal before the appellate authority. Appeal before appellate authority 10%, appeal before the appellate tribunal extra 20% of the disputed tax. You know that. So disputed tax is 280 crores. So on the 10% is 28 crores or 50 crores. 25 plus 25 CGST is GST, because here it is IGST clearly 50 crores, whichever is less. So 28 crores you have to deposit. Next, so assuming that appellate authority also confirms the order of the Joint Commissioner, company wants to file an appeal before appellate tribunal. So appellate tribunal extra 20%. So 280 crores into 20%, that is 56 crores or 100 crores now, whichever is early less. So additionally 56%, 56 crores has to be deposited. So this is next question. Next, they have asked one straight theory question from customs duty here. What are the conditions required to be fulfilled by the importer when he is importing the goods which are eligible for preferential rate of duty? First, you should make, if you are importing the goods from preferential areas and applying for preferential rate, what are the conditions? Apply for the preferential rate and make sure mentioning that they are imported from preferential areas, and please check that preferential one even conditions immediately. Even I am not able to recollect. Let us see this. So at the time of importation, you should make that specific claim of preferential rate, and next you should also claim that the goods are produced or manufactured in preferential area, and the areas whatever you are claiming should be of course notified as a preferential area, and the origin of the goods shall be determined in accordance with the rules made under section 4 subsection 2 of Customs Tariff Act 1975. Okay, a theory question, you can just go with that. Next, they're asking you to write, now it is all about theory questions. Write a brief note on summary assessment, or explain the provisions regarding rectification of errors apparent on the face of the records, or state the circumstances where the proper officer can authorize arrest, and arrest will come into picture if anything is greater than 2 crores. No. Next one, determine the liability of retiring partner to pay any tax, interest, all that stuff. So the theory questions, my suggestion is, anytime you are going through this MTQ after the video also, for these theory questions, please just read the answers once properly and just proceed. Okay. I'll just show here itself. See, the summary assessment can be initiated to protect the interest of revenue with the previous permission of additional or joint commissioner, where the proper officer has the evidence that taxable person has incurred a liability to pay tax, and any delay in passing the order will be adversely affecting the interest of revenue, that is the tax department. Then additional commissioner or joint commissioner will ask you to go for the summary assessment, but they may withdraw the summary assessment order. Okay, when application is made by the taxable person within 30 days of the receipt of order on his own motion only, if they find that order to be erroneous, or maybe instead of going with this summary assessment, let us go with section 73 or 74 like that, if they feel, they can withdraw the order also, but within 30 days. And where a taxable person to whom the liability pertains is not ascertainable, who is the fellow, who is the person, taxable person to whom the liability is ascertainable, if that is not identifiable regarding the goods especially, the person in charge of the goods will be assessed under summary assessment and he will be liable to pay tax. That is what regarding summary assessment. Now they've also asked regarding rectification. Okay, so the rectification actually, when section 161, if any authority has passed an order or issued any direction, etc., etc., and later on, see, on their own motion, or the error which is apparent on the face of the record, which is visible on the face of the record, either on his own motion or anybody like the GST officer brought it to their notice, or affected person itself applied within 3 months from the date of issuance of such decision or order, all that stuff, then they can rectify. But no rectification shall be made after 6 months. That means 3 months they will apply. That can be condoned by 3 months also. But after 6 months, no rectification will be allowed. Okay. And the set period of 6 months shall not apply in such cases where rectification is purely in nature of correction of a clerical error or arithmetical error, or arising from any accidental slip or omissions. Anything they have ignored, any amount they have ignored, or instead of 10 lakhs they have made it 1 crore, something like that. Any clerical arithmetical error, or because of any accidental slip or omission of any information. Okay, and of course, principle of natural justice should be followed by the authority carrying out such rectification if it adversely affects any person. Next, they have asked about this arrest. No, so as I already told you, sir, any person committed an offence attracting punishment prescribed under 132(1) A, B, C, D. That is, as I told you, no invoice, fake invoice, or ITC on fake invoice, or tax collected not paid to the government exceeds 2 crores. Then only this prosecution will come into picture. Okay, the essential, this means a person can be arrested only when the tax evasion is more than 2 crores and the offences are specified namely, as I already told you, that 4 cases. However, the monetary limit shall not be applicable if the offences are committed again. So, for repeated offender, arrest can be irrespective of the tax amount. Okay, sir. What is the responsibility of the retiring partner? What is his tax liability, sir? Retiring partner, whenever he retires from the firm, he shall intimate that to the commissioner of the jurisdictional commissioner by notice in that behalf. But whatever the liability incurred till that period when he is a partner, whether it is ascertained or will be ascertained in future, for that he will also be liable. But if he is not giving the intimation within 1 month from the date of retirement, he shall continue to be liable for all the liabilities arising till the date of intimation. Okay, so these are the theory parts. With this, we are done with this mock test paper 1. So students, with this, yes, we are done with the video. Hope you have enjoyed this thoroughly, and please do make sure you are sharing this with your friends and colleagues, seniors or juniors who are in need of this. And make sure when you are preparing, I always tell you, enjoy your preparation, believe in yourself. Definitely success is going to be yours. From my end, wishing you all the very best. See you all in another video. This is your Mr. GST signing off. Jai Hind.